Okay, so I'll share with you. So we have been discussing on last class was company account, right? So company account, but today we will discuss on share because that's what we're going to focus upon, right? And we already have a little bit touched down on what is share capital, right? What is share capital? So there are different types of share capital. So today we're going to quickly understand those share capital, that the breakdown of share capital, so that it will help us with our coming classes. We will start with our calculation with start of journal entry of our share, because this is all related to company accounts, which we should understand, and how to accountable for is related to share. Okay, so this is what I want you to keep in mind as we're going to discuss. And um, okay, this diagram, the whole diagram, this is the different type of share capital that can, under the authorized share capital, right? But we know that a share capital, it have um, authorized share capital, issue capital. Under authorized share capital, there are two type of capital share, right? And one is the authorized capital share, which you call as the nominal or registered capital. And this is what we are going to focus on and study, and how to accountable for this share, how to write and record our accounting for this share, right? And so authorized capital, we know that um, we have a issue of capital. Okay, issue of capital, and issue of capital and unissued capital, and then we will focus on the issue capital, because unissued capital, we know that it's not issue, it's not put out, so there's nothing to really understand about. So under issue capital, it will further divided to subscribed capital and unsubscribed capital. And under the subscribed capital, we will see that there is a called up capital and uncalled up capital. And again, call up capital, it will divide it into paid up, right? You know, it have their series of how it's subdivided: paid up capital and calls in area. So these are all the terms which you have to get familiarized with when we are. And let's say if we can go and go ahead and have our one of the example that we can see how these capital breakdown that we should understand. Okay, and then uncalled capital, we have the reserve capital and unreserved capital. So the purpose of today, for those of you who just joined in, I will be a little bit rushed today because my internet I'm using through the data pack of the phone, so I'm not sure how much it sustained because I'm connected to a computer. So okay, so let's see what is issued capital. Okay, so issue capital is a part of authorized capital. We know it. This is the type of authorized share capital by the company. They offer to a public, right? To the public, it means to the people on the floor, not with someone who are an employee of the company. And for subscription, it means they can subscribe to share. So these are called as the issued capital, the share capital that they set aside and they offer to the public to be subscribed, right? To take subscription. It called as the issued capital. So this include the share offered to the vendors for subscription other than cash, right? So capital can never be more than a nominal capital, and the share may not be fully subscribed by the public. And we will see in the example, sometimes you have set aside to collect the raise the capital for, let's say, 5 lakhs, and you issue 50,000 share worth of rupees 100 or 10 rupees. And sometimes what you put out for the public, it's not necessary that uh, by the time you close the subscription, it's all get subscribed. It may be not fully subscribed. Okay, so those unsubscribe, we will see how they unsubscribe capital, it will become the capital that is not bringing money in, right? So the remaining is called as the unsubscribed capital. And let's see this subscribed capital. What is subscribed capital? Subscribed capital is basically the nominal value of a share subscribed by the public. For example, you issue 100, right? 100 rupees worth per share, and this is being subscribed by the public, the amount that they have been taken up. And share issue for the public may or may not be fully subscribed, as we know it. And if the share are fully subscribed by the public, the issue capital will be the same as the subscribed capital. So it's mean that issue capital is the amount that originally the company intended to put for the public, right? To subscribe. So that is the amount. But for subscribed capital is the amount, the reality of how many the public really subscribe for it. Then we take the actual amount that they really subscribe for it. But in case that it's happened that it's fully subscribed. So when in the it have been mentioned that the share is fully subscribed, it means that it have been to the full capacity of how you issue, right? The share capital that you issue. So the subscribed capital amount will be at par or the same as the amount that is issued, right, for your capital issue. And but it's also can be not the same amount in case the share is not fully subscribed. So the remaining amount will become unsubscribed capital. Okay, the remaining amount will become unsubscribed capital, which you will see and understand better when we scroll down a little bit now, and we will see it in the example. Okay, and called up capital. So now when your share, this is call up capital, is applicable to the subscribed capital, right? Those capital of share that have been subscribed by the public, it can come as the call up, right? It's now you have fulfilled those application form, you fill up, you want to subscribe, but you are not paid up. So the part of subscribed capital which has been called up, the board of directors, they will decide to call the amount. For example, the share is 100 rupees per share, the face value, right? The nominal value of the share is 100, but it's not necessary that it's depend on the board of directors. So now the board of directors thinking that they don't want the whole amount of money now, or maybe it's not attractive to the public to subscribe. So they maybe break it down to 2 or 3 calls. It means they will collect the amount of that 100 rupees per share into breakdown. It's like installment type, right? Call up. So subscribe capital, it's been divided into different calls according to the board of director. But if the board of director may decided that they want to call the entire amount, then it will be only first call, or you can call up the call up. It's only one call. First, they usually written first and final call. It means that you are required to pay a full amount of 100 rupees. And it's not necessary the entire amount. It's depend on, like we said, the board of director of each company. And when the capital is called up, then it was go into as paid up or call in arrears. Okay, so we say that the subscribe and call up capital is paid up when the amount that they have requested to call up for capital have actually been paid by the shareholder. So each step of the way, since the time we issue the capital, we have to record in our accounting book, okay, of share. We have the share accounting book. So starting since the amount you are issuing the capital and the subscribe capital, and then uh, um, call up capital, and then how much it actually been paid up. Okay, the amount that have actually been paid up by the shareholder is known up as the paid up capital. So if all the call up capital have been received, then the paid up capital will be at par or equal amount as the call up capital. And the part of call up capital which have not been received, for example, if it's not fully paid up, then the remaining amount that have not been received, it's known as the calls in arrear. Okay, call in arrears. And so it means that paid up capital is equal to called up capital plus minus call in arrear. Okay, so I hope you get that. That is the equation of paid up capital. So paid up capital is equal to called up capital minus call in arrears. So if there is no call in arrear, it means that the call up capital and the paid up capital, they are equal. It's fully paid up. And what is uncalled capital? So uncalled capital, it is the remaining part of the issue capital which has not been called. They have not been collected. So sometimes some company there is a case that there is uncalled capital. So hence you have to record it too. You know that the rule of accounting is the double entry, right? What we record what come in and we record what go out, and debit and credit, it have to be equal. So whatever we receive, whatever we not receive, it have to be a record each and everything. Then we uncalled capital, the capital that have been uncalled or have not been call for the people to actually paid up. It sometimes the company by special resolution mean they make come up with a special rule or resolution. They call it the term resolution by the board of director. They decided to keep a certain portion of this uncalled capital till their liquidation. It means till the time they want to resolve the company. And this portion, it will become and call as the reserve capital. Okay, will become and as the reserve capital. So reserve capital is the amount where the company set aside till the time of their liquidation. Then only they will reserve that amount. And reserve capital usually come from the uncalled capital. Okay, the capital amount that have been not unsubscribed and maybe subscribed but not called up by the company, and they just keep it the amount as the reserve. Okay, so let us see in one illustration. Okay, let's see if I can share this illustration. Okay, I hope you can see on the screen. Okay, are you able to see? Okay, so in this illustration, it just to help you understand, right? So you have to know all these terms, the authorized capital, issue, and subscribe, call up, paid up, in arrears, so that when you start do your journalizing recording in your accounting book, you will not confused by it. So here in our illustration, that a limited company has been incorporated with an authorized capital of how much? 50 lakhs, right? 50 lakhs rupees. And this 50 lakhs rupees, they want to divide it into 5 lakh of share. So they want to raise up an authorized capital of 50 lakhs, and they want to divide it into 5 lakh of shares. 5 lakh share, then how much should be the amount of the share so that they can raise to 50 lakhs? It's 10 rupees each share, right? So the face value of this share is 10 rupees each. So it have offered 4 lakh share. So when we divide it, the amount of share should be 5 lakhs, right? The whole thing. But it offer 4 lakhs only. You see, 4 lakh share for subscription by public, and out of this, only 3 lakhs 50,000 share were subscribed. The directors call for an amount of rupees 8 per share and receive the entire amount except a call for rupees 5 per share on 1,000 shares. So determine the amount of different category of share capital. So this is the amount of share capital. You see the detailed information that given. So you have to be sure and clear on what amount you record for authorized capital, what is the amount of issue capital, what is the amount of subscribed capital, paid up capital, and unsubscribed capital. Okay, so here is the breakdown. Let's see how they break down. Okay, I hope okay, I can put in the full screen. Okay, so you can see it here, but in when we start calculating later, I want you to have your notebook ready and the calculator ready. Okay, for the next class, when we start on our notebook and calculator, so that we will have a little time on discussion. I will be sending ahead of time the problem as we're going to discuss also, so that you will have an idea, and then we will do it together, right? So that you can start doing ahead of time and only clarify when we have doubts and issue. Then okay, so here you can see that first and foremost thing that we have to record according to the hierarchy of our share, the authorized capital, right? The authorized capital, it is given, and how much is the number of share is 5 lakhs, right? And the amount per share was they decided at face value of 10 rupees. So the total amount that authorized capital should be is 50 lakhs. So that was given from the beginning. So we have to record that. So now when it comes down to the issue of capital, that also is given. Though they are authorized capital of 5 lakhs, but they decided to issue capital to the public to subscribe only how much? Only 4 lakh of shares. So 4 lakhs multiply into how much? 10 rupees per share, right? The face value. So their issue of capital is only 40 lakhs, okay? 40 lakhs rupees. And then, so it means that if our authorized capital is 50 lakhs and we issue to the public only 40 lakhs, so the remaining amount, so we have the differences to take our authorized capital minus our issue capital. So the amount of unissued capital will be rupees 10 lakhs, right? So I know everyone is clear till this part. You understood, right? So now let's move on to the subscribed capital, because here it have mentioned that it offer 4 lakh share for subscription by the public. But out of these, how many was actually subscribed? How many were actually subscribed? The 3 lakhs, only 3 lakh 50,000 were subscribed, right? They have mentioned that only 3 lakhs 50,000 were subscribed. So now you multiply the 3 lakh 50,000 into 10. So the subscribed capital amount is amount up to only 35 lakhs rupees. So we can find the unissued capital, right? Unissued capital is the differences. So 5 lakh is the unsubscribed capital. The unsubscribed capital, that is 5 lakhs. And then um, out of, when we come to call up, right? We come to call up, we know that out of this 350,000 share, they decide to call up of how much? Did they take the whole amount of rupees 10? No, they did not. If you have seen here, they have mentioned that they are call up the amount of 8 rupees per share and receive the entire amount except the cost for 5 rupees per share on 1000 share. So we have to be clear on here, okay? Clear on here. So call up capital is 350,000 into 8 rupees because they said they received the entire 8. So how much call up they supposed to get? 8 rupees into 350,000, and if you have your calculator, it will become 28,000. So that is the call up amount. And then uncall up capital. Uncall up capital, it's mean the remaining amount because the whole face value was 10, but it been called up for only 8 rupees. So it's mean the difference here is how much? The difference here is 2 rupees, right? So the 2 rupees multiplied by 350,000, the subscribed capital, is come amount to the uncalled capital is amount to 7 lakh rupees. Okay, and now paid up capital. Sorry. So this is the amount they want to call up. Okay, they want to call up 8 rupees for everything, and 2 rupees remaining is mean uncalled up. And then it have mentioned here that it have received the entire amount. So it means that this call up have been paid up the entire amount of 8 rupees that they call up for, except, but they give the exception here, right? Except for rupees 5 per share on how much? 1,000 share. Okay, 1,000 share. 5 rupees, 1,000 share. The rest of the share that have been 350,000 share, 8 rupees, everyone, it have been received except 1,000 share that have been called for only 5 rupees per share. So how do we record it? Okay, how do we record it? So here, this is how you record it. So paid up capital, you know that 350,000 into 8 rupees have been, we said we have received all. Then except those 1,005 rupees, right? 1,000 and 1,000 share. Here they have put into 10,000. It's not correct. It's 1,000 10 into 5, right? Into 5. So you multiply that, multiply this 350,000 into 8. We know that we get 28,000, right? 28 lakhs. 28 lakhs. So you minus the 5,000. So that's when you get 27,95,000 lakhs. Okay, so that is the paid up capital because there are 1,000 capital which actually they only call for the paid up only verse of 5 rupees, but yet though they call up for 5 rupees, they did not pay, they do not receive that amount. So that amount, it become called in arrears, right? It become called in arrears, the amount that is not being paid up. So how much is not being paid up? Is 1,000 share worth of only 5 rupees they call up. So that is 5,000. So if you add these two together, if you remember the equation of the call up capital, here 28,000, it equal to paid up capital minus the the call up capital. It's equal to these two add together, paid up capital plus arrear, right? Plus arrear. And the paid up capital is when you minus it, the call up capital amount, this paid up capital is mean 27 lakh 95,000. It equal to this call up capital minus the arrear. So when you take 28,000 28 lakhs, 28,000 lakhs, and then minus is 5, then you will get the same amount. So these three transaction should be, these three transaction should equal, right? Should match up together, right? According to the equation. The equation is paid up capital equal to call up capital minus arrear. If you take this three and you do according to the equation, if it's not equal, it's mean you have made a mistake somewhere of recording, rather the arrear or rather the paid up amount, and you have to redo again. So I hope you have seen and understand this how the different category, or you can say the different category of this share and the level of how it is. So when you record it, it have given, you have to record it from the first breakdown, okay? The amount of authorized capital first, then compare how much been issued, how much has been subscribed, and then how much is not is unsubscribed, then how much is called up, and how much is uncalled up, and then how much is paid up, and how much is called in arrear. So since you have understood this, and I will give you the notes later once we almost finish, and I will give you the practice. I think I will give you the practice as an assignment. I will give two breakdown information like this, and you have to write down this breakdown of the category of share, and just take a picture and submit it. Okay, so after this class, I will put two up, maybe toward the evening or so. I will give 2 days time so that you have enough time to do it. So thank you for joining in today, and I'm glad that my internet is not dropped down.